Good afternoon, traders. This is Tony D from easyMarkets in Sydney. Update for you today. The US dollar strength has continued sharply for a second day on Monday here. Now, the reason that you're seeing so much US dollar strength is that the US yield that we talked about, the 10-year, is moved and tested 3 last night. Now, it's led to the Aussie breakdown below 76 this morning. The dollar index, if you're looking at the dollar index, is broken above that key 90 level last night, shot higher to year highs, testing at 90.80. Now we've held so far today, a little bit of profit taking in Asia so far, but if the yields break 3% or remain so elevated, then the US dollar is on a very strong footing, and the trending of the dollar yen is getting pretty aggressive. Broke 108 up to 108.80 so far today, and is definitely driving US dollar strength at the moment, and you're seeing it across the board. So stocks have gone very quiet, but dollar yen very strong, pound very weak, back below 140, euro as well as taking the next leg down, testing that 122 level. And so everything's on the verge of big trends. I mean, in terms of how you play it, you definitely want to be waiting for these corrections to get involved. You don't want to be selling so low. This is day 5 of selling of the euro and the Aussie and the pound, and day 5 of buying of the dollar yen. So the market can pull back significantly, at least 30 to 50 pips. But then when you see the market go back into buying US dollar mode, if the yields remain strong and nothing changes, and there's no data really to change the market until Friday, then you will be looking to try and follow the trends as much as possible in trading. Whether you believe it or not, the price action is very strong, and that generally means it's real. Yeah, and so it's unlikely to change on a dime. And even if it does, if you get in at the right levels, you're not going to lose too much here. Okay. Now, in regards to the data today from Australia, so let's focus on the Australian dollar. What you want to be looking at is the CPI numbers came in as expected, not enough to get the market to sell. Tested 75.80, which is a known support, has bounced up here. Now it could retest the breakdown point, which is the 79.30 to 50 zone, and that would be normal in any sort of market anyway. Just as short covering kicks in. No real reason for the market to be bullish on the CPI numbers. They're very benign, but definitely it doesn't really help the selling at this point. And the profit taking that you're getting on the Aussie dollar is seen across the board, also on the euro as well. So it is about time that the market rallies, but I don't think it's going to get too much higher than 76.30 to 50, and that would be the sell zone today. If you want to look a bit more closely at those levels that you want to look at on the crosses, because a lot of the crosses are in play because of the significant movement in the majors, give us a call on the contact details below, and we can go through any particular pair you like. In regards to, if you're not a member of easyMarkets, please click on the sign up link as well, and we'll see if we can't get a dealer assigned like myself to you. If you're looking for crypto information, we do have a crypto desk here led by Jimmy Pan, very good crypto trader, and he'll give you the latest on the crypto rally, which is now entering its second week as well.